Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. It is July 17th, Friday, and we just wrapped up a exciting week of trading. Earnings season is kicking off. Stocks are getting pummeled. There's rotation. And I'm just going to ask the question, make the case, show some evidence. Is that the top for the AI hardware part of this cycle? Don't get mad. We're going to look at some charts here. I hope it's not, because I would love to trade some of these stocks again, but the damage is increasing. Good news is not enough. So let's get into it. Hopefully you are doing well out there and we're able to sidestep some of the carnage. Let's start with Taiwan Semi. So this is Taiwan Semi, and it is a linchpin, of course, in this whole space of just outlook on demand for the whole AI complex, and it reported blowout numbers, and it was not enough for the stock. We saw this a week ago with Micron. Blowout numbers, everything that we could have hoped for. The stock briefly popped and then it rolled over, and of course now it's trying to break down. And so it doesn't have to be the end of these stocks, but we ask ourselves, has so much been pulled forward that it's time to digest? It's time to grow into these numbers and to chop it out for 6 months. Think of NVIDIA. Everyone's frustrated with NVIDIA because it's mostly been sideways, but it was the first to really go parabolic and just make tremendous gains. And now for the last 12 months, 18 months, it's still up slightly, but it has underperformed everything else. So is that the precursor to what we're going to see in this part of the trade? We're going to look at some more charts. This is semiconductors relative to the SPY. Again, they went parabolic. They broke records. We recorded a video. This is back in June? When we had the best performance for semiconductors we have ever seen, ever. So, again, coming back down to earth a little bit, I think is healthy. Obviously, semiconductors aren't going anywhere. They will find a bid. There's value there, and there will be select companies, but we're in this cooling off phase. This is SPY relative, or SMH relative to SPY. We're starting to break a 50 SMA, and yes, we're oversold in the short term. We could clearly bounce, but we're going to look at more of those charts in a little bit. This is some news coming out in different sources. Obviously, I have no way to know if it's entirely true, but basically margin calls all over the place for the Korean traders, which had a lot of liquidations. There's different sources, different numbers, but I'll just leave it like that. This is the weekly drawdown in a lot of what I would call the crowded or just the, leading AI names. This ranges all over the place. I just picked a big basket of names, and this is a weekly drawdown. This is just this week. So anywhere from, call it 7-8% all the way down to 20% declines for some of these kind of linchpin companies that are, at the center of building out the AI complex. This is month-to-date drawdowns for that same basket. So this is 2.5 weeks, 3 weeks of trading, and we have, a median drawdown of about 25%. Of course, when you zoom out, some of these names are still up 150, 200, 300%, right, in the past 12 months. So perspective is everything. Time frame is everything. Are you a trader, or are you someone that's looking for a long-term growth entry? This might be a fabulous time if you're an investor to be looking at these names, especially if you miss the move. So if your outlook is 18 months or 24 months, then this is absolutely a decent time to start DCAing if you believe that we just have legs here. I wanted to show this because this was last week, I believe, or this is really 2 weeks ago, but this is our Rockets momentum portfolio. So we are swing trading momentum. Momentum has gotten obliterated. Last week, we talked about how many exits we saw. Remember, that was one of the leading things as we started to look at our analytics. We said we saw a huge amount of exits. This was last week. So we were a little bit early on kind of getting out before this, what I would call now the second leg lower. This is the margin call, or this is the pain or the overstayers, where it's starting to get more uncomfortable. So in some sense, we tend to be pretty early on, getting in on sort of that rise up in April when we were just breaking out and coming out of the consolidation period. We were starting to get tons of new entries, and that was before there was a lot of other things kind of starting to work. And we sort of see it on this way too. Is a little bit of a precursor. Obviously we're still seeing some exits. We're still in trades that are getting hit this week in terms of our momentum book, but the majority of them were sold the other week. Now, another anxiety-inducing sort of headline here on Friday was the new open source model that was launched. So we had Kimi K3 come out, which is looking like, again, preliminary benchmarks, that it's as good, if not better, than frontier models, say Fable, at logic, coding, and various tasks. And so this is now putting a lot of doubt, pressure, uncertainty, scrambling into this whole pot where you're already kind of in a little bit of a fear momentum cascade. Then you get this coming out and you're trying to figure out, okay, who's going to be impacted here, and all just adding a little bit of murkiness to everything. Throw on that OPEX this Friday. So again, absolutely, sort of exaggerating moves here as you go into a monthly OPEX into summertime, light volume trading, seasonality weakens up, earnings coming up, elections coming up, a perfect storm for a pullback. So again, I will pause here to say, if you're an investor or if you're someone with a long-term time horizon, DCAing and looking at, some of these companies that are 50% off their highs is a totally valid strategy. If you're a momentum trader, there is nothing here anymore. Like, all of the momentum has been flushed out. If you're a little mean reversion trader, you catch a little bounce here, but you're really looking for things to repair. So our momentum book is super light right now, and frankly, chomping at the bit to get some type of stabilization, and then maybe next month start to see a nice flurry and uptick of maybe new names, maybe old names, but they need to prove themselves. All right. So that's what we're going to look at. We're going to look at a lot more charts later this video. That's right. I forgot IBM. So IBM suffered one of its worst days. I think it was its worst day ever. I have data going back to 1990. This is the worst day that it registered as far as I have data for. So this was just a monster decline here. This is the weekly chart. And this is, I think the moment where the market is just being cautious on a lot of different things. But I mean, I feel like this can come in lots of different flavors here. Another thing that becomes kind of clear right now with all of the AI hardware names kind of selling off. Do we see one of the Mag 7 kind of companies slow down or cut CapEx? I'm not trying to be a doomsdayer on any of this stuff because I think we are still early in the cycle, but I just think that where value goes next could just be a new spot. Maybe it is on the software side. Maybe it's drugs and biotech, and maybe there's some unlock efficiencies we're going to see in smaller cap companies, startup type things, where they're going to start really being the next momentum kind of leg up in this AI trade. But the point is, we have to just be on our toes and just pay attention to what the market is telling us. And the market right now is really in a shoot first, ask questions later type of mode. Netflix, pretty much unrelated to this, I believe. I didn't look at the earnings report. It's not a name I really track, but this made new kind of cycle lows here. I believe this is about 50% off. And again, it just shows maybe, investors are a little bit tired. Now, where they're not tired is energy. Energy getting a nice follow through week up, moving back into this range. And I'll remind everyone again that this is one of the best performing sectors year to date. Now, before we move any further, we'll take a quick pit stop. Our sponsor, Investors Business Daily, they sponsor all these shows on our weekly Friday videos. We thank them for that. We've got discounts in the description of this show, Market Surge and their IBD Digital. Check it out with a link in the description of this episode. Now, let's look at some numbers here. So we have oil at really standing alone, 14% up, enough said there. I don't think I mentioned it in the list of concerns or issues that the market is grappling with, but of course, the war over in Iran, that is back up and kind of front and center. And so that's causing a spike there. Bonds actually doing a little bit of a job hedging this week. And you can see everything else down the list. Q's down 4%, getting hit pretty hard. S&P 500, we're going to talk about this in the second half, but you got to give the index credit. It is remarkably resilient given all of the carnage that is happening underneath the hood in that AI trade. Really sort of hats off impressiveness here. We're going to talk about that because it's pros and cons, but still in the kind of range chop messiness here, but it did start to break down on Friday. VIX is finally getting a little bit jumpy again, not quite 20, but got close to it on Friday. Dollar index still consolidating, but that could break out if more fear comes, and interest rates now starting to stabilize around that 4.5. If we look at sector performance on the week, energy, real estate, staples, financials, healthcare, that was the safety area of the market. Technology, obviously the hardest hit. Now, 52-week highs and lows, so there is a little bit of broadening out underneath the hood. Again, it's one of those careful what you wish for type of things, because we are getting more stocks hitting highs. A lot of financials, some select biotech and that sort of an energy kind of really helping this list here. And we're not really seeing any big fear spike on the right-hand side. So generally speaking, it's not half bad, but if you're tech or if you're semi-focused or if you're momentum focused, this was a painful week. Percentage of stocks above a 20 SMA, again, not too bad, holding pretty firm, and put to call ratio, not too much to say. I'm sure this spiked going into the weekend. And Bitcoin, again, not too bad, kind of hanging in here, doing a little bit of a magnet digestion around this 65K area, fueling up for the next big move. Is it a move back into the 50s? Or can we push towards 70? That is really kind of the two logical next targets I think that we're going to be looking at here for Bitcoin. So let's look at some charts. All right, here we go. We've got charts in front of us. S&P 500. This is the range. Nothing has changed here. We looked at this level. Frankly, we've been looking at these two kind of support resistance areas for the last couple of weeks, and nothing has changed with the structure of the S&P 500. We're still very much range bound. In fact, last week we looked at our own market navigator, our health score on the market, and we said we would be more cautious chasing breakouts this week. We would be more cautious chasing momentum. That was our remarks last week, and that proved to be good advice, because we spent the week mostly chopping around and then breaking lower just on Friday here. Of course, this is the S&P 500. We looked at those other high-flying AI related stocks that certainly started selling off earlier. Let's take a pit stop here. Let's take a look at our market navigator. So this is our swing trading specific outlook here on the market environment. And if you tuned in last week, we got our downgrade into what we call the mixed swing environment. It's not strongly bullish. It's not strongly bearish. It is squarely in the middle. And it tells us to expect, frankly, exactly what we're getting. Just chop, messiness. And sometimes for traders, this is the hardest environment because there's so much chop and because charts do look marginally okay, and then you get lulled into buying them, and then they kind of smack you over the head and they fall back down and you get chopped up. I've done it a million times. I'll continue to do it, but these are why we have these tools, is to try and say, hey, this is the likely scenario you're probably going to be experiencing right here. So you want to pay attention and you want to make sure you're not being so aggressive at highs. So all is to say, mixed swing environment. Internals are still decent. There's still sector leadership. There's still industry participation. So there is a broadening. There's a subtle broadening that is happening underneath the hood. And so that is constructive. If we look down here again at our longer term picture, you can see it's been easy kind of trading for the last, before, as we kind of ended June, but that April to June time period was a good money making opportunity. Now we're starting to flip into this neutral mixed state, and we ask ourselves, are we going to roll over and deteriorate from here, or can we pull it together, and then can we, kind of rotate back into the bullish side of things and break out? That's what we'll be waiting on for the next couple of weeks. But we have earnings season, we have all those other things we're paying attention to. Now, Mag 7, this is our outlook here on the Mag 7. I'll just highlight this. Tesla was a sell signal, exit signal for us on Friday. But you can see that all other of these mags are in bullish or leaning bullish positioning. So these guys are saving the market right now, because if they were selling off like they were coming into June, this market and those indexes would be a lot lower, because there wouldn't be any rotation, not enough meaningful rotation to likely save and buoy the indexes. So you really do want to pay attention to these hyperscalers, these Mag 7 now, because they're holding everything up while semiconductors and that AI infrastructure trade sort of unwinds right here. So I do think, again, this was, I believe, a remark last week as well, you want to be paying attention. You want those guys to continue to pull some weight. S&P 500, again, we talked about that. The Q's starting to break its range. So this is a bit more concerning, because you do now have the Q's really testing here. Now, a mixed market state tells us that, support is probably going to hold, or try and at least give an attempt to hold. And resistance tends to hold too. It's a frustrating environment. So let's not get too excited if you're bearish that we are rolling over yet. Let's see what next week brings. Again, I wouldn't be surprised if the bulls try and save it here and get a little bit of a bounce, but can they recover enough? Can we keep ourselves above this 695 zone? That's what's going to be important. The Qs, though, kind of hanging, dancing right at this June support. And then the Russell 2000 kind of just, again, doing its own thing like it has for most of this year. VIX, like we talked about at the top, is getting bid now. So we're almost up in the high teens, not quite 20 yet, but there's definitely some fear out there. It was option expiration, so we have a new cycle to look forward to as we come in. And then, of course, we have earnings season that will continue to be front and center here. Now, again, like I talked about at the beginning, this is NVIDIA. This is a weekly chart of NVIDIA. So really, if you go back to certainly October of last year, so you're almost talking 10 months from, the 10-month look back, you're entirely break even on this trade in the middle of, most semiconductor stocks and infrastructure names going up tens of percent, or if not hundreds of percent. You have the lead kind of dog here that is really just the most dominant player in this whole build out, that is entirely flat for 12 months. And so if you don't think that that can happen to some of these other names, again, semiconductors just as a whole here are just starting to slip through this June support. You kind of sandwiched in here, and look where price just spent most of its time on Friday, right in between here, May lows, June lows. And so volume picked up. There's been some distribution days clearly seen here since the start of June. And we have, again, what could be a topping process for semis and a rollover that gets you back towards a retest of the breakout, or you have a big sideways through time, think like NVIDIA, that never really broke down. It just spent time in purgatory. And so one of two things can happen. And I think my guess is you're in one of those two phases. It does not feel like a V-shaped move from my perspective and experience, but I could be totally wrong. That's why I run systematic systems, because if we start getting signals in our momentum book back into MU and SanDisk and Western Digital and Light and Coherent and all the names, then I will gladly take those signals. But until and if they start showing up and the market proves it, I want to stay stepped aside. Micron. So here we're down about 30, what are we at? 35%? I don't know where my little toolbox is. I don't have it. So we're down probably, 35 or some odd percent. There's a gap here that didn't quite get filled, didn't get back to the May lows. Look, I know everyone is very bulled up on Micron. The stock's up 195% this year. It's up 240% last year. Go back and look what happened in other, very cyclical boom periods. I would just say, don't get lulled into the narrative. Respect price action, follow price action, have risk management rules, know your time horizon. These things become awfully important as you start to potentially switch regimes. Again, down the list here, we can look at DRAM, which is Micron with SanDisk and SK Hynix. You can look at CoreWeave, back down towards lows, probably cutting a little bit too deep. It's short-term oversold. You can look at things like iron. I very distinctly remember back in this period here, looking at iron and kind of saying the same thing of probably feels like a top is in for iron for the foreseeable 6 months. And lo and behold, it's been 10 months. The top is still in the stock. If that was the rationale here, I mean, it hasn't really gone much lower and there's still tradable swings in here, but from a bigger perspective, it's not, catapulting out to new highs. So that's beat up. Applied Digital. I mean, go right down the list this week. There are so many names that are down 30, 40%. They're in bounce territory in the short term. Question is structurally, was there too much damage? And is the market going to start sniffing out some other rotation plays that we just don't know what they look like yet? I mean, we do know a little bit. Some of the things like security now, CrowdStrike. I mean, take a look at this chart. This looks nothing like anything else we just looked at. It's breaking out. It's at new highs. It's volatile. It's clearly a beneficiary of the AI wave. You could look at things like Cloudflare, which is one of my favorite stocks. That's at highs. So there are things that are working here. They're maybe a little bit different, new, and not just semiconductors, but I think that's what we want to be paying attention to. And again, do your homework and just kind of, think about where you are as a trader, what you're trying to achieve here. There's definitely opportunity, but there are risks. So just kind of know where you stand there. And I think that's a good place to land at this episode. There was a lot going on. Earnings coming up, so we have that to look forward to. I don't know if do we have any of the, I don't think we have any of the, let's see, Meta is the 29th, wins Apple, the 30th, Google, 22nd. Okay, so yeah, we do have some. We have Alphabet, we have Tesla. All right, so double check the earnings calendar because clearly you can see that I haven't yet. So we do have some Mag 7 reporting. And again, say your thanks to Apple this weekend because Apple, again, being one of the strong arming of keeping this market, the indexes, the market cap weighted indexes afloat this week as this stock breaks out to new highs. Clearly, probably something big coming from Apple behind the scenes, and the stock is prepared for it. Maybe Siri finally gets useful. So I think that's all I have to say. Thanks as always for tuning in. Don't forget to check out the links in the description of the show. We got our Galahad system, which I haven't given much airtime to because it's been pretty quiet. It hasn't been doing a whole lot, but maybe next week I'll do a showcase on Galahad and where it stands. Rockets, there's a lot of updates coming to Rockets soon, and I think it's the perfect time to have some of these updates coming because the new wave of momentum is right around the corner. So you're going to want to stay tuned for that. I think that's it. Enjoy the summertime. See you back here next weekend. Take care.